Okay, this is the Orderflows market review for April 28, 2016. This is a special review. It's 11 p.m. Chicago time. My name is Michael Baltos. I'm the founder of Orderflows.com. The reason I have this one is there's some interesting developments tonight in the market with the Bank of Japan. So first, a brief disclaimer. This presentation is for educational and informational purposes only. It should not be considered a solicitation to buy or sell a futures contract or make any other type of investment decision. Futures trading contains substantial risk and is not for every investor. An investor could potentially lose all or more than the initial investment. Risk capital is money that can be lost without jeopardizing one's financial security or lifestyle. Only risk capital should be used for trading, and only those with sufficient risk capital should consider trading. Past performance is not necessarily indicative of future results. Okay, so the reason why I'm doing this video now is about an hour ago there was an announcement by the Bank of Japan. They kept monetary policy unchanged, which nobody was really expecting at all. Actually, they were expecting more stimulus from the Bank of Japan. So obviously the first market that's going to be affected is Nikkei. The Nikkei futures dropped about 3.5% within a few minutes. This is the S&P chart. Okay, S&Ps, we had closed yesterday. Where's yesterday's close? Going back here, we closed around the 92.75 level. So we were pretty much trading, about a point and a half higher coming into their announcement. And what happened at their announcement? Bam, sold off from 94 straight down to what is that? 75, 74 and a half. It was quite a dramatic move. Really, market was disappointed. Obviously it's on the back. Yesterday was the FOMC meeting where they decided to do nothing. I've always held the belief that the central banks sort of talk with each other. I mean, everybody, I think, expected the policy from the Bank of Japan to be unchanged, but they were maybe expecting a little bit more stimulus, and when they said there's going to be no stimulus, then the market just fell over. And so on the order flow chart, let me find it here. Okay, this is, oops, just bear with me here. Going back. Okay, so where are we here? So 10 o'clock, just before 10 o'clock is when the announcement came out, is 10 p.m. So, 8 p.m. we sort of trading around our highs here at 93.5. You have a divergence and nothing really, but here you got a delta scalper signal, sort of, signaling a little bit of change in supply and demand. It's hard really to be trading around the Asian session. We did pop back up, make a new high. Second time you got a divergence right at 10 o'clock. This is when everything fell over. I'm not saying, yeah, you could have taken this and you'd have, a big 15-point winner. If I was taking the signal, I'd probably be getting out somewhere near at a scratch because it's just taking too long to develop. And, again, do you want to be trading into an FOMC, a Bank of Japan announcement as well, just like I wouldn't trade during an FOMC announcement. So, let's take a look at the order flow and what happened thereafter. I should probably put this so you can see the imbalances. Again, it's one of those things, it's all happening very fast, and you're thinking, well, there's an imbalance here, I could just sell it. You probably would not be able to sell it that fast. If it was, on the minute chart here, you can see it's over a period of 5 minutes actually. So, if you're trying to sell, the market's coming off, you're thinking, hey, I could sell 92, so then it's trading 91, and then it's trading 90. By the time you sell it, you're probably selling it at 88, realistically. But, let's take a look at what the order flow did. So you got a selling imbalance. That's really, a sign that the market's about to fall over. It's a selling imbalance right off the high. Again, we're 2 points off the high. That's why I like to take selling balances off the highs. You get a bit of a pullback here. Again, there's no ratios. It's all happening so fast. The initial knee-jerk reaction right here from 92 down to 88 is about a minute and a half. So, again, it's saying you start to see it come off thinking you're selling at 91. You're not going to be able to get 91s. You'll probably be realistically selling 88s, 89s. But, it's giving you plenty of opportunity to get in. It's slowed down a bit here. So from the time the initial knee-jerk reaction to here is 5 minutes, 4 minutes. And it just keeps selling off. I'm not one that's going to be trading on the news, but people will ask, once the market settles down, what do you want to do? And it's just all continued selling. You see more selling. It's just jumping around. Hits the low here at 74, and it's extremely thin volume. It just straight down. And you triggered off some stops. Once we get down to this area in here, to me this is a stop. Stops being triggered. So from 79 down to 74, you see it happening. Look at the time. It's 10:05, 56, 56, 56, 56. This is to me that's a stop being triggered. These are stop-induced selling imbalances, and the market, it's looking for offers, looking for bids. It's looking for offers to find. There's just nothing there. It all happened so fast within that 1 second. That's what a stop run really looks like. And if you're thinking you're going to be trading that, I got news for you. You can't react that fast. Then you see the bids start to come in, and it starts to thin out. It starts to fill in with the volume. You've seen volume being traded on the offers, and we're starting to come up now from the low. Again, it's not on any major buying or any shifts in that sense. So that takes us to where we are right now at 2081. Right now at 11 and 39 seconds. So if you really want to know what a stop run looks like on the order flow, this is what it looks like. It's a lot of zeros on one side. So again, if people talk about stop runs quite often, and that's something they think it's some sort of trading strategy. But the reality of it is, it's going to be next to impossible. You'd have to have a bid thrown in here to take advantage of it. Again, this is where the market's, there's nothing in there. You see trades, but it's people hitting the bid. It's not people lifting the offer. It's not until a few, whatever I'll call it, milliseconds later that you start seeing offers come back in, and people are able to buy it to move it back up. Just real quick, I'll pull in another 5 range chart. This is, it's a little bit smaller, so it's a little bit easier to see. This is my new indicator. It was great to pick this high, but I'm not sure if I would have been trading that. Again, you can see it here. It's much faster. It's a little bit easier to see on this chart since the scaling is a little bit smaller. So basically, you just stop in here at what is that, around 79, and it just triggers it, goes 5 points lower. Then it's not till a little bit later where it starts to come back up here. You got a couple of ratios. You got another indicator here, 1, 2, a little bit. Again, how's the market moving? It's moving. It's slowed down a bit, and it's starting to move fairly normal. I mean, it's a little bit fast for an evening time, but it's still moving pretty good. Again, it's my new indicator here. It got another little sell-off. So that brings us, where we are right now, 2081. We're still 10 points, 94 is our high, but, we're over 10 points off the high. So, it was just an interesting night. If you've been watching it, in case you're wondering, you're going to turn on your screen in the morning, wondering what the heck just happened. At that time, it was the Bank of Japan. So you have the selling imbalance right off the high. You're trying to sell it. You're not going to sell that. People say, "Oh, you sell it right here." That you can't. This market's moving too fast. You're not going to be able to sell it. There's no. If you just what's interesting, if you're looking in here, there's no buying. No net positive deltas. There's some buying, but really, this is just computers trading in here at this time. This is just all so fast. well, I'll say computers, you know, there's probably somebody saying, hey, yeah, buy it here, you know, buy some at the market, you know, whatever. It's not, you know, it's not, how to describe it. It's not, you know, it's not active trading. In this case, you know, sellers have overwhelmed the buyers. You know, really, to get short off of this imbalance, you're getting short somewhere in here, you know, at 88, 89. You know, would have given you a nice trade. But again, you know, hey, you know, are you going to be sitting there trading it, you know, after a Bank of Japan announcement? Are you going to be trading it, or, you know, right a minute after the Fed makes an announcement? Of course not. You know, but again, you know, it was quite a dramatic move to see in the evening session. You know, in case, you know, if you're looking at the chart, you're thinking, oh my goodness, gosh, you know what just happened here? We sold off from 94 down to 74. Because to be honest, you know, when I first looked at this, when I first saw this, I thought, you know, there was, you know, a fat finger trade. Somebody screwed up and entered something incorrectly. You know, that's what happens when you get these big sell-offs by a few points. But, you know, in this case, it wasn't. You know, it was the Bank of Japan announcement. That's why the market is taking a bit, you know, it's taking its time to sort of, you know, retrace this move. And, you know, it's, you know, like I said, you know, 74, this, you know, you see this thing right here, this wick, you know, that's your stop run. You know, that's the stop's getting triggered, where it just triggers it and bounces right back up. You know, effectively the low is going to be about 78. You know, not 74. So, you know, this low is a bit, not dodgy, but, you know, it's a legitimate low, but, you know, it was triggered by stops. You know, whereas this was triggered by active, you know, selling, not a stop up here that triggered it and have a cascade effect. I mean, there were probably some stops in there, but, you know, the most of this is we stopped here, went back up, stopped here, went back up. You know, this is, you know, just strong selling. You know, so we're working our way back up. And we'll see what's going to happen. You know, come Thursday morning when we get in, if we're going to be trading back up into the 90s or not. You know, I just thought it was interesting and worth putting a little video out in case, you know, people were wondering, you know, what the heck just happened here. So thanks for watching this video. It's almost 11:30 p.m. Chicago time. You know, again, it's something, you know, most people wouldn't even notice just because they're asleep right now. But it's just quite an interesting movement overnight, and, you know, it was a good example of what a stop-induced imbalances look like. And, you know, realistically, you can't necessarily trade around them. I mean, in theory, it'd be great. You think, wow, look, yeah, I could buy it down here because these stops are triggered, but, you know, you're not going to be able to react that fast to take advantage of those. You know, you look on a chart and you think, well, yeah, if I just bought it down here, I could sell it up here. You know, you're not going to buy it here unless you had a bid in here, because it's the stop that got triggered and pushed it down an additional 5 points. So again, thanks for watching this, and have a good night.